The stock market trembles today as the Bombay Stock Exchange, the oldest stock exchange in Asia, witnessed a precipitous fall. The BSE stock prices have taken an unprecedented plunge, crashing by a record 16% in a single day. This is not just a ripple but a tsunami in the financial ocean. The freefall comes on the heels of the Securities and Exchange Board of India's, or SEBI, recent directive. SEBI has changed the game, instructing the BSE to pay regulatory fees based on the notional value of options contracts rather than the premium value. This paradigm shift could lead to a substantial hike in the regulatory fees for the BSE, shaking its earnings per share to the core. Analysts are already foreseeing a stormy future, predicting a potential 15 to 18% decrease in earnings per share for the fiscal years 2025 and 2026. As we speak, the BSE is in the process of evaluating the validity of this claim, which, if validated, could result in a payment of approximately 68.64 crore rupees plus GST for past periods. The financial burden doesn't stop there. The company may also need to cough up an additional 96.30 crore rupees plus GST for the fiscal year 2024. Industry giants like Jefferies and HDFC Securities suggest that BSE could potentially offset this impact by raising options pricing. However, it seems the regulatory fee burden for BSE will be significantly higher than that of the National Stock Exchange due to differences in pricing structures. This could potentially widen the gap between the two major stock exchanges in India. This news comes as a shock, especially considering that just recently India's stock market surpassed Hong Kong's to become the fourth largest in the world. This growth had been driven by a surge in retail investors, strong corporate earnings, and significant foreign investment. The BSE crash, therefore, is a significant blow that could potentially impact the trajectory of India's stock market. To summarize, the BSE stock price crash is a result of SEBI's directive to pay regulatory fees based on the notional value of options contracts. This has led to a potential increase in regulatory fees for BSE, impacting its earnings per share. The company may need to make substantial payments for past periods and the fiscal year 2024. The crash could potentially impact the growth trajectory of India's stock market, which recently became the fourth largest in the world. As the dust settles on this day of drastic market fluctuations, we are reminded of the inherent volatility of the stock market. This is a story that will continue to develop, and only time will tell the long-term impacts of this seismic shift in the BSE's stock prices.